What's up, accounting enthusiast? Welcome to another episode of the
LiaBenefits Series.
a podcast designed for you and your journey towards being an accountant. I am Raven Andy Mapilis together with Jeremy Hintugao, your host for today. Hold on because we will be discussing Chapter 18, Defined Benefit Plan. Are you ready? Because we are. So sit back, relax, and let's learn together. First, let's have the learning objectives. To understand the relationship between fair value of plan assets and projected benefit obligation. To know the computation of employee benefit expense. To compute remeasurement of plan assets projected benefit obligation and effect of asset ceiling. To recognize plan settlement. And lastly, to understand the treatment of asset ceiling. So what is defined benefit plan? It is simply defined as a post-employment plan other than defined contribution plan. Under a defined benefit plan, si entity ay may obligasyon na magbigay ng defined benefits kay employee kapag nag-resign ito. In basic accounting considerations, the benefits plan should be viewed as a sub-entity, separate and distinct from the primary entity, which is the employing entity. Yung ginawang plan for the employee is viewed as sub-entity, sabi dito. It is not part of the entity technically. The sub-entity maintains information that does not appear in the financial statements. Such information is kept only by means of memorandum records. So, naka-memorandum records lamang siya and therefore not reflected in the general ledger accounts of the primary entity. The information contained in the memorandum records of the sub-entity contains the fair value of plan assets, yung tinatawag nating FVPA, and projected benefit obligation na tinatawag nating PBO. Next, the fair value of plan asset is the source of funds set aside in meeting future benefit. Ito yung fund value ng entity or ito yung fair value ng total ng contribution sa entity less the benefit plus the actual return. Next is the projected benefit obligation o yung tinatawag nating defined benefit obligation is the present value of expected future payments required to settle the obligation arising from employee service in the current and prior periods. Ito yung kung magkano pa yung estimated na utang ni entity kay employee. Next is the prepaid accrued benefit cost is the item that appears on the financial statement of the employer entity. So, sa ating illustration dyan, kapag mas malaki si asset or the FVPA, ito ay overfunded and prepaid benefit cost siya. Under siya ng non-current asset. Pero, kung mas malaki si obligation or the PBO, ibig sabihin may kulang. Ito ay underfunded at accrued benefit siya. Under siya ng non-current liability. To expand, let's have the illustration number 1. Under funding, the only component of the benefit expense is the current service cost of 500,000. The entity made a contribution of 450,000 to the defined benefit plan for the current year. The journal entry to record the expense and the contribution is dahil meron tayong ina-expect na expense, therefore, employee benefit expense na 500,000 debit, and meron siyang fair value plan asset na na-contribute, so cash, 450,000 credit. Obviously, underfunded tayo. Then, magiging balancing figure natin si prepaid or accrued. And pag underfunded, it means there is a non-current liability. So, ang ilalagay natin is prepaid or accrued benefit cost na 50,000 credit. Saan nakuha si 50,000? Employee benefit expense less entity contribution. For this case, ang nangyari is accrued benefit cost since meron pang payable si entity since 450,000 lang yung contribution niya or yung fair value asset plan niya, but the current service cost which is under PBO niya is 500,000. For the illustration number 2 naman, overfunding, again, the only component of the benefit expense is the current service cost of 500,000. The entity made a contribution of 600,000 naman to the defined benefit plan for the current year. The journal entry to record the expense and the contribution is dahil nga meron tayong ina-expect na expense, therefore, employee benefit expense of 500,000 debit. Then, as you can see, overfunded tayo. Dahil mas malaki yung contribution ni entity Therefore, magiging balancing figure natin si prepaid or accrued. And pag overfunded, it means there is a non-current asset. So, ang ilalagay natin is prepaid or accrued benefit cost of 100,000 debit. So, saan nakuha si 100,000? Entity contribution less employee benefit expense. And then, meron siyang fair value plan asset na na-contribute. So, cash 600,000 credit. For this case, ang nangyari is prepaid benefit cost since merong asset si entity, since 600,000 yung na-contribution niya o yung fair value asset plan niya. And the current service cost, which is under FVPA siya, is 500,000. Next, prepaid accrued benefit costs. Observe that the prepaid or accrued benefit cost account is the balancing figure. As the years go by, this account will build up and it may have debit or credit balance at the end of current reporting period. Kung ang account ay may debit balance, ito ay classified bilang non-current asset na ipinakita bilang prepaid benefit cost. Otherwise, kung ang account ay may credit balance, ito ay classified bilang non-current asset na ipinakita bilang accrued benefit cost. To go further, let's have the comprehensive illustration. At the beginning of current year, the memorandum records in the relation to a defined benefit plan showed the following. Fair value of plan assets of 5 million, less project benefit obligation of 7 million, the prepaid accrued benefit cost is 2 million. It means underfunded siya dahil mas malaki yung payable niya kaysa sa asset na na-acquired niya. And pag underfunded siya, ito ay accrued benefit cost. During the year, current service cost, 1,200,000, past service cost, 300,000, actual return on plan assets, 800,000, contribution to the plan assets of 1 million, benefits paid of 500,000, actuarial loss due to increase of 900,000 in PBO, and discount rate of 10%. So, the question here is, magkano ang papasok kay entity na employee benefits expense? Magkano papasok sa OCI? And magkano yung total FVPA and PBO at the end of the year? Para masagot natin yan, let's move to the computation. Here's the computation. Current service cost na 1,200,000, i-add natin sa past service cost na 300,000, and then i-add natin to interest expense on PBO na 700,000, na nakuha sa 7 million times 10%, and then ililess naman natin sa interest income on FVPA na 500,000 na nakuha naman sa FVPA na 5 million times 10%. And then we will arrive at employee benefit expense na 1,700,000. So yan ang tanong natin kanina, ang kanyang employee benefit expense ay 1,700,000. Actual return on plan asset, 800,000 ay ililess naman natin sa interest income on FVPA na 500,000 to get the remeasurement gain on plan asset na 300,000 na atin namang ililess sa actuarial loss due to increase in PBO na 900,000 to get the net remeasurement loss na 600. And then ipag-add natin si employee benefit expense na 1,700,000 at net remeasurement loss na 600,000 to arrive at total defined benefit cost na siya namang i-add natin sa contribution to the plan na 1 million para makuha natin si accrued benefit cost during the year na 1,300,000. Sa makatotoo, ang total benefit cost ay ang amount to be funded from contribution ng entity para malaman kung prepaid o accrued benefit cost siya during the year. Let's have the journal entry for the transaction. Employee benefit expense of 1,700,000 debit, net remeasurement loss of OCI of 600,000 debit, and cash of 1 million credit, prepaid accrued benefit cost of 1,300,000. Then, we have prepaid accrued benefit cost at the beginning na 2 million and nagkaroon ng credit adjustment during the year na 1,300,000 and add up lang natin, then we will get the prepaid accrued or accrued benefit cost as of December 31 na 3,300,000. In reconciliation, so FVPA in January 1 na 5 million, add to 1 million, contribution add to interest income on FVPA na 500,000 plus remeasurement gain on plan asset of 300,000, then the total will be subtracted to benefits paid of 500,000 to arrive at FVPA as of December 31 na 6,300,000. Let's go to the simple approach. Another way is the simple approach. Dito sa FVPA of January 1 of 5 million, i-add lang natin siya sa contribution plan of 1 million. Tapos i-add din natin siya sa actual return on plan assets of 800,000. So, paano nakuha si 800,000? Interest income on FVPA na 500,000, ipa-plus lang natin sa remeasurement on plan assets of 300,000. Okay? After that, ilaless si benefits paid of 500,000 to get the FVPA of December 31 na 6,300,000. And then the PBO in January 1 of 7 million, i-add naman natin sa current service cost of 1,200,000, add to past service cost of 300,000, add to interest expense and PBO of 700,000, and then less the benefits paid of 500,000. And then i-add naman natin siya sa actuarial loss due to increase in PBO of 900,000 to arrive at 9,600,000 na PBO as of December 31. After that, FVPA of December 31 na 6,300,000, nilalas naman natin sa PB of December 31 na 9,600,000, then we will get the prepaid or accrued benefit cost credit na 3,300,000. So, let's take a look at the worksheet approach. Ayan. So, sa worksheet approach, mas mabivisualize natin and mas kitang-kita natin dyan Mas organized kasi dito, as you can see, nandito yung mga records in general journal and yung memorandum records and then yung general journal entry nga, Nakikita natin dito lahat ng balances of December 31. Ayan, in general journal, remeasurement of OCI of 600,000, benefit expense of 1,700,000, cash of 1 million, and in memorandum records naman, FVPA of 6,300,000 and PB of 9,600,000. Let's jump to the worksheet journal entries. First transaction, to record the current service cost, we debit employee benefit expense of 1,200,000 and we credit projected benefit obligation of 1,200,000. Next, to record past service cost, we debit employee benefit expense of 300,000 and we credit projected benefit obligation of 300,000. Next, to record the interest expense on PBO, we debit employee benefit expense of 700,000 and we credit projected benefit obligation of 700,000. Itong tatlong transaction na to, kung mapapansin nyo, pare-parehas sila, Next, to record the interest income on FBA, we debit fair value of plan assets of 500,000 and we credit employee benefit expense of 500,000. Pag interest income kasi, tinatanggal or ino-offset sa expense natin and kinukuha natin yung net interest, pinagbabawas natin para i-reflect sa employee benefits expense natin. Next, to record contribution to the plan, we debit fair value of plan assets of 1 million and we credit cash of 1 million. Ang contribution, nakakapagpataas ng fair value of plan assets siya. Next, to record benefits paid, we debit projected benefit obligation of 500,000 and we credit fair value of plan assets of 500,000. So, dito double yung impact ni benefits paid Bawas sa FVPA and bawas din sa PBO. Next, to record actuarial loss on PBO, we debit remeasurement loss OCI of 900,000 and projected benefit obligation of 900,000 credit. Dito is nagkaroon ng actuarial loss sa OCI, tapos increase naman sa PBO. Last, to record the measurement gain on plan asset, we debit fair value of plan assets of 300,000 and we credit the measurement gain of OCI, 300,000. Nagkaroon ng increase sa ating FBA dito. Moving to settlement of plan, a settlement is a transaction that eliminates all further legal constructive obligation for part of or all of the benefits under a defined benefit plan. For example, a one-off transfer of significant employee contributions under the plan to an insurance entity through the purchase of an insurance. Entities may settle their post-employment benefit plans by having annuity o kontrata for insurance entities for less on the amount in the retirement fund. A lump sum payment to plan participant in exchange for their rights to receive a specified post-employment ay matatawag din po nating settlement. However, the standard clarified that a lump sum payment to plan participant made under the terms of the existing defined benefit plan is not a settlement. This is referred to as routine settlement and considered an actuarial assumption that should be included in the measurement of the defined benefit obligation. The most obvious example of a routine settlement is the option to take a lump sum payment instead of an annuity or a periodic payment. Let's have the gain or loss on settlement. Pass 19, paragraph 110 provides that an entity shall recognize gain or loss on the settlement of a defined benefit plan before normal retirement date. When the settlement occurs, the gain or loss on plan settlement is the difference between the settlement payment and the present value of the defined benefit obligation on the date of settlement. The settlement payment includes any plan asset transferred and any payments made directly by the entity in the connection with the settlement. Any gain or loss on a plan settlement before normal retirement date is fully recognized and included in service costs in the computation of employee benefit expense. Let's have the illustration. At the beginning of current year, the memorandum record in relation to a defined benefit plan showed the following. Fair value of plan assets of 4 million. So, and project benefit obligation na 5,500,000, and then we will get, pagmaminus lang natin silang dalawa, and then we will get the prepaid or accrued benefit cost na 1,500,000. Mas malaki yung PBO o yung liability. So, it means meron siyang accrued benefit cost at ito yung 1,500,000. During the current year, the following transactions are gathered. Current service cost of 800,000, actual return on plan assets of 300,000, contribution to the plan asset of 600,000, settlement payment of defined benefit obligation of 500,000, present value of defined benefit of 500,000, and discount rate of 5%. So for the computation, present value of defined benefit obligation settled of 500,000 will add to settlement payment before normal retirement date of 450,000 para makuha natin si settlement gain na 50,000. And then, si current service cost na 800,000 na ileless naman natin sa settlement gain of 50,000, and then the total will add to interest expense on PBO na 275,000. So, paano ba nakuha si 275,000? Si 5% times 5,500,000 lang, okay? Then, add to interest income ang FVPA of 200,000. So, paano nakuha si 200,000? 5% times 4 million lang. After that, we will arrive at employee benefit expense of 825,000. So, si actual return on plan assets of 300,000 ay ililess naman natin kay interest income on FBPA of 200,000 to get remeasurement gain on plan asset of 100,000. And then, yung nakuha nating employee benefit expense na 825,000 kanina ay atin namang ililess kay remeasurement gain sa OIC na 100,000 to get the defined benefit cost of 725,000 na siya namang i-add naman natin sa contribution to the plan na 600,000. And then the total will be our accrued benefit cost during the year na 125,000. Okay, let's go to the next slide. The journal entry, employee benefit expense of 825,000 debit and remeasurement cost of RAC of 100,000. credit cash 600,000, prepaid accrued benefits of 125,000. Then we have the prepaid accrued benefit cost of 1,500,000. Add 2 credit adjustment accrued benefit cost during the year of 125,000 to get the prepaid accrued benefit cost as of December 31 of 1,625,000 credit. In reconciliation, FVPA in January 1, 4 million add to contribution to the plan of 600,000 and then ilaless naman natin sa settlement payment of defined benefit obligation of 450,000. After that, we'll add to interest income of FVPA of 200,000 plus remeasurement gain on plan asset of 100,000 to get the FVPA as of December 31 na 4,450,000. Here is the another approach. So, FVPA in January 1 na 4 million, add to contribution to the plan na 600,000, and then ilaless naman natin siya sa settlement payment of defined benefit obligation na 450,000, then add actual return on plan asset na 300,000 to get the FVPA as of December 31 of 4,450,000. Okay? After that, interest income of FVPA na 200,000, i-add lang natin sa remeasurement gain on plan asset na 100,000 to get the actual return on plan asset na 300,000. So, yung PBO natin in January 1 na 5,500,000, i-add naman natin sa current service cost na 800,000. And then, i-add din natin sa interest express on PBO na 250,000 na siya namang ating ililess. Yung total nun, ililess natin sa present value of defined benefit obligation settled na 500,000. To get, para makuha natin yung PBO as of December 31 na 6,075,000. And then, yung FVPA as of December 31 na nakuha natin kanina na 4,450,000 ay atin namang ililess doon sa nakuha din nating PBO as of December 31 kanina na 6,075,000 para makuha natin si prepaid accrued or accrued benefit cost na 1,625,000 credit. For the next topic, let's have Miss Hintugao.
Next is the FVPA more than PBO. So kanina, na-discuss na ni Ms. Raven kung ano nga ba ang FVPA at PBO. Ang FVPA, ito yung pondo na inilalaan sa paparating na obligasyon mo kapag may mag-retire na employee, and itong obligasyon naman ang tinatawag na PBO or Projected Benefit Obligation. It simply states that kapag ang FVPA or Fair Value Plan Assets ay mas mataas kaysa sa PBO or Projected Benefit Obligation, ang ibig sabihin lang daw nito ay ang FVPA ay overfunded, kaya naman meron itong Prepaid Benefit Cost, which PAS 19 calls it surplus. PAS 19, paragraph 64, states that the surplus in a defined benefit plan must not exceed the asset ceiling, and when we say asset ceiling, it is the present value of any economic benefits available in the form of refunds from the plan or reductions in future contributions to the plan. So, itong asset ceiling na ito yung economic benefits na pwede mong ma-refund or reductions sa iyong future contributions. Let's look at the illustration here. At your end, a defined benefit plan revealed the following data. Fair value of plan assets, 6 million. Projected benefit obligation, 5 million. Prepaid or accrued benefit cost, surplus, 1 million. The asset ceiling is 1,200,000. The surplus does not exceed the asset ceiling. Kasi nga, 1,200,000 ang ating asset ceiling, tapos 1 million lang ang ating surplus. Therefore, yung prepaid benefit cost natin or yung surplus asset of 1 million should be reported in the statement of financial position at year-end. We have here the comprehensive illustration. A defined benefit plan revealed the following information at the beginning of current year. Fair value of plan assets, which is 4,500,000, projected benefit obligation of 4 million, and we get the difference of these two to get the prepaid or accrued benefit cost surplus of 500,000. We have asset ceiling of 300,000, so the effect of asset ceiling is 200,000. The following data are provided for the current year. Current service cost of 900,000, actual return on plan assets is 1 million, contribution to the plan which is 700,000, benefits paid 200,000, actuarial gain due to decrease in PBO 300,000, asset ceiling on December 31 of 800,000, and the discount rate which is 10%. Provided in the PAS 19 paragraph 8, a remeasurement is any change in the effect of the asset ceiling, excluding interest on the effect of the asset ceiling. The amount is determined by multiplying the effect of the asset ceiling at the beginning of the period by the discount rate. The difference between the total change in the effect of the asset ceiling and the interest on the effect of the asset ceiling is considered the remeasurement. Any increase in the effect of asset ceiling is a remeasurement loss minus interest expense on the effect of asset ceiling. Kaya siya naging loss kasi yung surplus ay mas malaki pa doon sa asset ceiling. E kapag ganun yung nangyari, ay maaaring hindi mo na ma-refund yung sobra mong kinontribute, kaya magiging loss siya sa'yo. Any decrease in the effect of asset ceiling is a remeasurement gain plus interest expense on the effect of the asset ceiling. Ito naman yung kabaliktaran ng nauna. Kaya siya naging gain kasi mas mataas yung asset ceiling mo kaysa sa kinontribute mo. So we have here the computation for the comprehensive illustration. So noong January 1, ang FVPA is 4,500,000, contribution to the plan of 700,000, actual return on plan assets 1 million, benefits paid which is 200,000. Kaya naman ang FVPA na natin noong December 31 ay 6 million. Ang PBO naman natin noong January 1 ay 4 million, current service cost 900,000, interest expense on PBO which is 400,000. Kasi minultiply natin yung discount rate na 10% sa 4 million na PBO. Less the actuarial gain due to increase in PBO which is 300,000 and benefits paid of 200,000. So, ang PBO, December 31 natin is 4,800,000. Diba kanina ang lumabas sa FVPA, December 31 natin is 6 million. At sa PBO, December 31 naman natin ay 4,800,000. Kaya naman ang prepaid or accrued benefit cost, surplus natin ay 1,200,000. Kaya naging ganito ay dahil ang ating FVPA is more than the PBO. We have asset ceiling, December 31 of 800,000. So kapag kinuha natin yung difference between the surplus and asset ceiling, we can get the effect of asset ceiling which is 400,000. Current service cost 900,000, interest expense on PBO of 400,000. Kasi minultiply natin yung 10% discount rate sa 4 million na PBO. Interest expense on FVPA of 450,000. And interest expense on effect of asset ceiling, 20,000 to get the employee benefit expense which is 870,000. Actual return on plan assets, 1 million, less the interest income on FVPA of 450,000. We have remeasurement gain on plan assets which is 550,000. Actuarial gain decrease in PBO of 300,000. Effect of asset ceiling, December 31, 400,000. Effect of asset ceiling, January 1 of 200,000. So the total change in the effect of asset ceiling is 200,000. And the interest expense on effect of asset ceiling on January 1 is 20,000. So now we have remeasurement loss on asset ceiling of 180,000. So this is the explanation for the comprehensive illustration. Actually, the effect of asset ceiling is credited in the memorandum record, which is the same category as the projected benefit obligation. Any increase in the effect of the asset ceiling is a remeasurement loss, and any decrease in the effect of asset ceiling is a remeasurement gain. However, the portion attributable to the interest on the effect of asset ceiling is included in profit or loss as component of employee benefit expense. And the remainder is a remeasurement recognized as a component of other comprehensive income. Remeasurement gain on plan assets, 550,000. Actuarial gain due to increase in PBO, 300,000, less the remeasurement loss on the change in the effect of asset ceiling, which is 180,000, to get the net remeasurement gain OCI of 670,000. Employee benefit expense 870,000 less the 670,000 net remeasurement gain OCI is equals to defined benefit cost of 200,000. Contribution to the plan 700,000. So the prepaid benefit cost during the year is 500,000. So the journal entry for this is debit employee benefit expense which is 870,000, prepaid or accrued benefit cost 500,000, and credit remeasurement gain OCI of 670,000 and cash of 700,000. So the reconciliation is prepaid or accrued benefit cost January 1 asset ceiling is 300,000. Debit adjustment prepaid benefit cost during year 500,000. So the prepaid or accrued benefit cost December 31 is 800,000. Note that the prepaid benefit cost on December 31 is 800,000, which is equal to the asset ceiling on December 31. Next is the transitional provision. Revised PAS 19 paragraph 173 provides that an entity shall apply this standard retrospectively. This means that any transitional effect of the application of the amendment under PAS 19 shall accounted for as adjustment of the beginning balance retained earnings. So kapag nagkaroon ng changes, ang i-adjust ay ang beginning balance of retained earnings. An entity need not adjust the carrying amount of assets for changes in employee benefit costs that were included in the initial carrying amount of the assets. In other words, assets such as inventory and property, plant, and equipment that include employee benefit costs in their carrying amount do not have to be restated. We have here the illustration. On January 1, 2021, the memorandum records show the following. Fair value of plan assets 4 million, unamortized past service costs 400,000, unrecognized actuarial loss 500,000, less the projected benefit obligation of 6 million to get the prepaid or accrued benefit cost of 1,100,000. So, on January 1, 2021, the entity, so ayan, dito na natin gagamitin yung revised PAS 19 and then effective January 1, 2021, ang mangyayari dito is fully i-recognize natin sa profit or loss yung employee benefit expense natin and all actuarial gains and losses during the year are fully recognized in other comprehensive income. Next is the accounting question. So the question is the treatment of the unamortized. So ano raw ang gagawin natin sa unamortized past service na 400,000 at sa 500,000 unrecognized actuarial loss? So under the transitional provision of revised PAS 19, the unamortized past service cost and the unrecognized actuarial loss shall be eliminated and accounted for retrospectively as an adjustment of retained earnings. So the adjustment on January 1, 2021 to eliminate the unamortized past service cost and the unrecognized actuarial loss is debit retained earnings of 900,000 and credit prepaid or accrued benefit cost of 900,000. 400,000 unamortized past service cost and 500,000 unrecognized actuarial loss that will sum up to 900,000 total debit to retained earnings. If this adjustment is posted to the general ledger, the effect would be the following. Prepaid or accrued benefit cost of 1,100,000, credit adjustment 900,000, so the adjusted credit balance is 2 million. This means that the adjusted accrued benefit cost is 2 million on January 1, 2021. As a proof, the memorandum records would show the following on January 1, 2021 after transition. Fair value of plan assets 4 million, projected benefit obligation 6 million, prepaid or accrued benefit cost credit balance 2 million. So, unamortized past service cost and the unrecognized actuarial loss are now eliminated and no longer reported. Next is the disclosures for defined benefit plan. A. Characteristics of the defined benefit plan and risks associated with the plan. B. Reconciliations for the fair value of plan assets and the present value of the defined benefit obligation. C. Separate showing of the current service cost, past service cost, interest expense, or income and remeasurements. D. Desegregation of the fair value of plan assets into classes that distinguish the nature and risk of assets. E. A sensitivity analysis for each significant actuarial assumption showing the effect on the defined benefit obligation for any change. Next, F. Description of any funding arrangement and policy. G. Expected contribution to the plan for the next period. And last, H. Maturity profile of the defined benefit plan. PAS 26 deals with the accounting and reporting by retirement benefit plans. This is for the preparation of general purpose financial statements or financial reports of retirement plans, which may be a defined contribution plan or defined benefit plan. In rare cases, a retirement benefit plan may contain characteristics of both defined contribution plan and defined benefit plan. For purposes of this standard, such a hybrid plan is deemed to be a defined benefit plan. Next is the report of defined contribution plan. The report of defined contribution plan shall contain a statement of net assets available for benefits and a description of the funding policy. The plan investment should be carried at fair value when preparing the statement of net assets available for benefits. When plan investments are held for which an estimate is not possible, the reason why fair value is not used shall be disclosed. Plan assets will have determinable fair value because in the discharge of their fiduciary responsibility, plan trustees will mandate the retirement plans hold only marketable investments. Report of defined benefit plan. The report of a defined benefit plan shall contain either 1. It shows the net assets available for benefits, the actuarial present value of promised benefits, distinguishing between vested and non-vested benefits, and the resulting excess or deficit. 2. A statement of net assets available for benefits, including either a note disclosing the actuarial present value of promised vested and non-vested benefits, or a reference to this information in an accompanying actuarial report. The actuarial present value of promised benefits shall be based on the benefits promised under the terms of the plan using either current salary or projected salary levels with disclosure of the basis used. The report shall explain the relationship between the actuarial value of promised benefits and the net assets available for benefits and the funding policy. As in the case of defined contribution plan, investments of a defined benefit plan shall be carried at fair value. So we have here the illustration if amounts are assumed for the statement of net assets available for benefits. A defined benefit plan of the generous company. On assets, we have 500,000 cash, receivables of 2 million, treasury bills of 2,500,000, equity securities 1 million, and debt securities 500,000. So the total assets of the generous company is 6,500,000. And for liabilities, we have net assets available for benefits, which is 5,400,000. Nakuha natin to kasi minus natin yung 1,100,000 sa 6,500,000. And also, we have excess of net assets over benefits of 4 million. Frequency of actuarial valuation. In many countries, actuarial valuations are not obtained more frequently than every 3 years. PAS 26 does not make it incumbent upon the plan to use annual actuarial valuation. And kung yung actuarial valuation ay hindi pa na-prepared on the date of the report, ang ginagamit ay yung recent valuation and the date of actuarial valuation is disclosed. Disclosure. The report of a retirement plan, defined contribution, and defined benefit shall disclose the following information. A. Statement of changes in net assets available for benefits. B. Summary of significant in accounting policies. C. Description of the plan and the effect of any changes in the plan during the period. And that is our report, Chapter 18, Defined Benefit Plan. Thank you for listening and we hope you learned something new.